Hey, what's going on, guys? Paul Motley here, and I've been asked a few times to sort of explain how I do my forex trading. And if you listen to the end of the video, I'm going to show you how you can get all these tools that I'm going to show you. But to start with, this is what you're normally presented with, right? What's on the screen right now, which is we're using an example, which is a currency pair. Okay, right? So we are looking at US dollar versus the Japanese yen, and we can change the little timescales up here, and I prefer to start with using the 1 hour. Now, this is normally what you're looking at, and as a starter, as a beginner, what does it look like? It looks like hieroglyphics, right? You just don't know what you're looking at. So let me just explain something real quick. These little bluey greeny lines there are price going up, the red is price going down. And if I zoom right in, because we said we were on the hourly time frame, each one of these bars represents an hour. So you can see right at the bottom, that is the 26th of February at 3 o'clock in the morning. That's 4 o'clock on the next, well, yeah, 4 o'clock, 5 o'clock, 6 o'clock, and so on and so on. Right, so how do I know, or how can I even start to understand where price might go? Well, I use a strategy that we call the Ninja trading system, which is NTS for short. Now, as part of what we do, and I said this at the start of the video, we do get access to some tools, right? And one of the things that we want to know is we want to get notified when there might be what we call a price reversal, which means that it has been going down, but then it most likely could be going up. And we think, right, well, that's great, but is it going to happen every time? Well, no, of course it's not. But we use what we call harmonic scans, which have like a running average of about 80% success rate. And you think, okay, 80% sounds pretty decent to me. I'd like to win 80% of my trades. Sure, cool. Right, so let's go and have a look and see what this looks like for us. So here's the scan. Now, this pattern that they drew up here, that's a harmonic scan, okay? And we give them different names. This one's called a Gartley, there's sharks, there's cipher, there's a crab, there's a bat, and all these sort of things. But that's not important right now. We know that these scans are successful 80% of the time. So we don't really know, well, you don't really need to know fully how they will work, but you just think, okay, this is giving me an indication. I can now do my own analysis on this and see how it goes. Now, if you can see on here, we've got little letters on each point. So we've got an X, an A, a B, a C, and a D. Now the D point for us is super important, because wherever that D point is, that's saying that's the point of reversal for the price. So in this case, the D is at the bottom. So this scan is saying that the price is likely to go up. Double thumbs up. Now, if it was a different scan, let's just bang one out here. D at the top, the price should go down. As it turned out, this one wouldn't have won, right? So you wouldn't have got into this one, and it wouldn't have, you know, it would have lost anyway. So where was I? I think I was on this one here. Right, so let's look how I actually set these up. So first off, I want to show a point in between these two letters where I want to set my target to. So we use what we call pitchforks, which is just right up here on harmonics, and we draw from the X to the C point there, and then it brings out this lovely little pattern all the way down to the D. Now, I know some people want to be super hyper accurate on these things, so you can zoom in if you really want, and I've pretty much almost nailed it, but it's good enough for me. If it's there or thereabouts, it's good enough. So if you see this little solid line running through the middle, they call that the median, right? And that is where we are going to set our price target. Now, as again, we're on an hour time, so each one of these bars, if you look, let me see if I can lock that in so I don't move it by accident. There we go. Wonderful. If we look, each one of these bars again represents an hour. So the scan came in at 1 o'clock in the morning on the 23rd of Feb. Now, it's a good chance you're not going to be up for that one, but if you were, that would have been a great time to get in, wouldn't it? Excuse me. So then we think, right, now on these trades, I really only want to risk 1% of my account. And why do I do that? Because I'm not stupid and I just think that 1% risk is pretty decent. But I also want to see what sort of reward I can get on that as well. And the Harmonic scanner actually has a really cool risk to reward planner as well. So let's say, for example, I got in on this candle here, which is 2 hours after the alert. Now I can move this point, which is going up, to the medium, which is there. And this is going to be where I will set it to say, that's enough, I'm happy, take my money out, I'm going to take the profit, close the trade. So I can record this little amount on this one here. That line there across the middle is where I would actually get into the trade, and all of this down here is what we call a stop loss. Now, because the D point is showing from the scan that it's going to be a possible reversal, I know that 80% of the time the price just isn't likely to go all the way down to there, because we set a stop loss again to protect our accounts, remember. So if the price does come down to this point, it will take us out of the trade and we lose that 1%, like I said to you before. Now, I like to have a decent risk to reward ratio, so I normally put my stop loss just below the D point, or if the D point was up here, it'd be just above the D point. Now it's showing me that I've got a risk to reward ratio of 4.33. So if I risk 1% of my account and it does well, I can actually grow my account by 4%. Not bad for a day's work, right? Think about that when you're putting your money sat in the bank and seeing how little you get on interest each year. This really isn't taking that long. I'm hoping you're following along. I was aiming to do this in like a couple of minutes so you can see just how simple it is once you understand the little bits and bobs that you need to do. So what's the next point? You think, oh great, here we go, off we go, and we're good. We are on with the races. But I also need to know how much I need to place the trade for, and they measure that in lot sizes. Okay, right, there's lots of different words which are coming out now, but hopefully you're going to follow along. So we use a little position size calculator, and all we need to do is just feed in the digits and numbers that we've already got here. So on the scanner, what are we looking at? USD JPY. So let's head back. We want USD JPY. That's there. Account size, I'm just going to put, for example, it's 1,000. That's just because it's easier on that. And we're going to risk 1% of our account. Now the stop loss pips is, again, there's all these different language and stuff like that. In forex we use a unit of measurement called pips. You don't really need to know what it is, but it's in fact I still don't know what it is, and I do just fine. Okay, but I know that from where I'm getting in to the bottom, the stop loss, it's showing me 97. Right now that's an extra decimal point, so there should be that. So it's almost 10 pips, so you ignore the extra part. So if that said 19.7, then it's 19 pips, right? It's just simple math, right? So basically we just use a tenth of what it's saying there. So it's about 10 pips. So I'm going to put 10 pips in. We're going to say stop loss of 10 pips, hit calculate, boom. Now 1%, we're risking £10. There we go, £10. But if you remember, if the trade goes our way, we can multiply that 10 by 4.33, which gives us a profit of £43. Again, not bad for a couple of minutes or hours work. And we think, right, how does this work? Is this as simple as that? First off, you're going to need the scans if you're doing this. And again, we'll explain in a bit on how you get the scans. But also, I don't just willy-nilly get into the trade just because the scanner says so. I want some confirmations. And if we remember when we were back here, this is what this whole thing looked like, right? Now, I can do this one of two ways. I can redraw this scan onto here just so that it looks pretty cool and neat. And I think if I do that now, I will do that for you just so you can see it. So I'll click on that and it'll tell me the times. So at that point there, that low point was 11th of February at 7 o'clock in the morning. I think the next one was about 16th at 10. I roughly know what's going on with these things, so bear with me. What did we say? 16? Oh, forgot already. It's because I'm talking to you guys. 11:10, right? So 11:10. Let's get down to business. 11:10. 11 at 10, which I think, was it 10 in the morning? I think it was. So it was about there. And then I think the next point was, well, I'm just going to draw this out because I'm pretty sure I know where it was anyway. So that was there, that was about there, and that was about there. Right? See my skills. Okay, right. So you can see it kind of looks the same. Now you should be wholly accurate on this if you want to do it properly, okay? But I'm not just going to do that because I'm just going a quick example. Now we can again draw out our pitchforks from TradingView as well. So we go from the X point to the C point to the D point. Now you might be asking, why am I drawing this out again? Well, the main reason is that sometimes if that price had carried on going down and down and down, this D point could redraw, and you think, oh, that's a bit naughty. Why is it redrawing for? Well, if it redraws, you can still use that scan. It's only when this scan is completely failed and it's gone through the stop loss, then we call that a failed scan, right? Because it may come down to here, this point, and that D point will then redraw. And you think, okay, cool, redraw my pitchforks, set my profit and loss, your risk reward ratio thing going again, and see how we get on. But if you remember, I said I wanted an extra confirmation before I got into this trade, and we use some cool indicators that are only available through us. Right, so we have a set of indicators which gets me to a point where I'm happy to get in the trade. Now, so we were on the 1 hour, but I like to see where it was on the 15 minutes. And because we want the price to go up, these little indicators, you see where it says ninja up and some of them say ninja down? I want a ninja down, I want to see a ninja up in this case on a 15-minute time frame after the scan has been drawn to confirm that the price is indeed going up. And I know that 80% of the time the price will go up to that median. So I wouldn't have got in straight away. I would have got in around, again, this is admitting that I probably wouldn't be up at this time in the morning, about 2:45 in the morning. So that's where I would then start my risk to reward position and get in the trade. So I would have got in here, and again we're drawing up to the median and then putting my stop just below the D point. Cool. See, now I've got a slightly better risk to reward ratio. Again, this is just going on the point that I might not have accurately put that D point in there. That's 22, 23, whereas that was 23.01. So that might be slightly out actually. Let's put this, let's move that over there. So it could have been there, could have been there. Oh, you're all nice and confused now, aren't we? But even so, that's where I was, that's where I've stopped. So now, if I am risking my £10, I have a risk reward ratio of 5.82. And as you can see, it took, how long did it take to get there? Started at 2:45 in the morning, and about, I think it, when did it hit? It actually hit there, which was 24 hours, just over 24 hours. And if that was risking 1%, I then made 5%, and nearly, yeah, it would have been there actually, you know, it would have been there because that's across from there, it would have been here, yeah, so about 24 hours, but I would have made 5% on my account. And you think to yourself, okay, right, well, that's great, Paul, but what if it loses? And what if the next one loses? What if the next one loses? Well, if you remember, I try and achieve above or thereabouts a 1 to 5. So I know that if I place 5 trades, only one of them's got to do well. And if you think about it, I just want to work the maths out for you now. So one trade makes 5%, and the other 4 lose 1% on each one. It's not really difficult maths, is it? You're still up by 1%, and you've only lost, or you've only won 1 out of 5 trades, which is a 20% success rate. Now we know that price from this D point, the reversal points from these scans, which we're given, are successful 80% of the time. but we only need it to be successful 20% of the time to still make a profit. Do you see where the maths comes into it? It's all about probability and averages, and that is why it makes so much fun for us guys doing forex trading, because it just happens this way. All right, this is how it works. Now, I did say to you before, confirmations, these ninja ups, ninja downs, they are not open for everybody. If you want to get these type of indicators, then you'll have to contact me directly or drop a comment below this video and we'll sort that out for you as well. If you want this to get the harmonic, so you can actually start from a point where you're getting given these trades, then again you'll need to drop a comment below this video or contact me directly. And that is the whole point of it. This is how I tend to win a lot of my trades, simply based on mathematics, indicators, my own analysis, and the scans we're given. When you combine all that up together, you have a pretty decent chance of being successful. And that is what we want for everybody that are watching this video right now. And I look forward to seeing you on one of the next videos.